You got a question? We're going to try to give you an answer. Welcome. It's Ask Annex. Fred Coleman, CFP and a wealth manager at Annex Wealth Management. Hello.
Danny?
Matt Morzy, Director of Research, also a CFP. Welcome to you.
Hey, Danny.
Let's get right to this one. We're always cautioned about chasing performance, but what is the alternative? That's a good question.
That is a great question, and something we coach through a lot, with our clients here. But I would say the alternative is patience in a balanced portfolio. It's one thing, you want to ride the hot stock, or you want to be able to tell people that you're beating the S&P 500 or that you're beating whatever index it is. But the thing about investing is smoothing out those returns over longer time periods. It's great to do really good 1 year, but if you buy that stock that's already up 100% and you're chasing that performance, well, there's a good chance that stock pulls back 25 or 50%. If it's volatile enough to go up 100, it's probably volatile enough to go back down that much as well, too. And one of the things I think about the most is over the last couple of years, we've had such a volatile stock market. And looking back, it's sometimes hard to remember all of the things that we've lived through since 2020. But the market's gone up a lot over that time period. And there's a lot of things that happened. So one of them I would remember back to 2020 and 21 is the argument of Cathie Wood being the newest investor out there versus old Warren Buffett. And all these articles came out on has Warren lost it, and Cathie, she's doing the new thing, and everyone was jumping on her bandwagon. And I remember seeing chart after chart after chart that showed Berkshire Hathaway versus ARK, ARKK, Cathie Wood's main ETF. And at one point I was looking through that this morning. If you started off 2019 with $10,000 invested in each one of them, by early 21, so 2 years later, you more than tripled your money in Cathie Wood's ETF, and Warren's was up a measly 30%. So terrible, right? But a year later, not even a year later, they were basically even to each other. And then you look at the start of 2024, Warren had doubled his money over that time period, and Cathie was only up 20%. So that 10 went up to 30-some, back down to 12. Warren just steadily moved up progressively over that time period. He weathered some of the market storms, was able to get through that. And now there's all the articles that Cathie Wood's style of investing is over. And 2024 ended up being an okay year for her. Growth started to pick back up again. But there's these ebbs and flows all the time with investment managers. And trying to chase those things will often get you the 25, 50, 75% pullbacks that we saw with funds like hers.
And you were being facetious when you said 30%, because that would be fantastic in most places, right?
Oh, for sure.
Right.
And he was trailing the market at that point. And one of the things that's really nice is that he publishes those annual reports for Berkshire Hathaway. And one of the pages in there all the time is the annual returns of the stock versus the S&P 500. And he's trounced it. I heard a stat the other day that if his stock went down 99%, he'd still be above the S&P 500 for that time period. That's just how well he's done over such a long time period. But there's 1, 3, 5 year periods where, he trailed.
Looking at the long term, we always say it like, past performance doesn't basically dictate what the future results are going to be. So anytime I'm looking to purchase a stock or making a recommendation, or our investment team is making a recommendation, it's like, would you buy that stock today, based on where it's at today, not what it did in the past, but where it's at today? Is it still a good purchase?
This next question on Ask Annex might tie into that. It's getting harder to tell my kids that Bitcoin isn't a viable investment. What makes the case for good old-fashioned equities?
We definitely have people on the team who, really get into and have been learning about, over the last few years, the details of what Bitcoin is or other cryptocurrencies and all of that. And for compliance reasons, I'll be a little bit more sensitive about some of those types of things. But, from an equity perspective, you're buying ownership of an actual company who produces things, manufactures them, or its services, and you're able to see, how well are they managed? Are they profitable? What do their margins look like? Are their margins growing? Are they growing faster than their peers? And you're able to tangentially own something and be able to see what it's doing and potentially not only have the price of it go up, but maybe you're receiving a dividend back. Maybe they're buying shares back and you have shareholder yield or return coming back to you versus Bitcoin, or you could even increase that to like gold or in things like that are non-income producing, that you're owning something like that. So they're just different styles. Bitcoin generally is going to be much more volatile than the general stock market's going to be, even more than the NASDAQ or those large tech growth companies are going to move in bigger swings than that. But it's just a different way to go. And, from an equity perspective, you know what you're getting, you know what that company is, and you can track it a lot easier.
Bitcoin is a, very new asset class compared to, stocks. Stocks have been around for years, and like you said, Matt, you have the track record, you have earnings to fall back on. When it comes to, crypto and Bitcoin, it's like, hey, I have this Bitcoin, Danny. Are you going to buy it for how much I'm asking for? It's basically based on supply and demand. How much is the next person willing to pay for it? And there's no underlying, earnings or company behind it.
No, not after you sold that NFT to me.
It wasn't me.
Fred Coleman is CFP and a wealth manager. No, it was not him. Fred Coleman, CFP and a wealth manager, Annex Wealth Management. And I didn't buy an NFT. Matt
Thanks,
Morzy
Danny.
is Director of Research at a CFP. Thank you very much.
Thank you.